What's going on, everyone? Happy Saturday. Hope you all have a good weekend so far. We're going to talk about the SEC modifications to the NMS plan, National Market System Plan. And basically what the background is on this. It came out yesterday. It is a plan for equity data dissemination to the public from the self-regulatory organizations. It basically affects 16 stock exchanges. And this time's a little different because the self-regulatory organizations oftentimes put out rule filings themselves. You know, they're self-regulatory, which is the problem. The SEC comes in. If they find anything they don't like, they have to file an amendment. It takes some time. This instance, however, the SEC comes in without notifying the SROs, makes some changes, and basically takes the reins. And it's good to see that. So hopefully, you know, it's not just a bunch of words and we see some action come from this. So let's go ahead and start dissecting the SEC modifications and see what it's all about. I'm probably going to break this down into 2 videos, by the way, because it is quite a bit to digest. So, implementation of the CT plan. So this is the plan that the self-regulatory organizations came out with. Basically, they came out with 5 different things that they wanted to have done before this plan were to be implemented. They wanted to basically have voting representatives and non-SRO voting representatives selected. They wanted to have fees established. They want to have agreements entered with processors. They wanted to have agreements with administrators and vendors and contracts and subscribers. Basically have everything ready before SEC approval. Now, the SEC came back and basically has now restructured some of this. Not all of it, but some of it. And that's the first time I've seen where the SEC did not file for an amendment and just went ahead and made changes without notifying the SROs, and then once met with adversity, filed for comment and sided with the majority of the commenters regarding the decision. So this is basically going over the changes that they've made. And an SRO, again, is a self-regulatory organization, which obviously is a big problem. If you're going to self-regulate, then you have no really incentive to stop breaking the rules. So the commission determined that the current governance structure of the existing equity data plan is inadequate to respond to changes in the market and in the ownership of exchanges, and to the evolving needs of investors and other participants. So basically, they're going to go ahead and explain the threshold issue of the commission's authority to modify the plan, and then it separately addresses each of the proposed provisions, discussing the comments received for each one and explaining the modifications to each one as well, if any, that the commission is making. So let's go and look at the changes. First, with respect to the proposed definition of the effective date set forth in paragraph B of the recitals, which is just a list of information, the commission shares concerns raised by commenters about the uncertainty of the timing associated with the defining the effective date as the later of the date of commission approval or the SRO's filing of the required certificate with the state of Delaware. So therefore, the commission is modifying paragraph C of the recitals to the CT plan to require the LLC agreement to become operative as an NMS plan governing the public dissemination of real-time consolidated equity market data within 12 months of the effective date. Now, the effective date they're talking about is, I believe, is going to be the date that we see come up in the Fed Register. So it'll be 12 months from that date. However, considering the changes that are going to be taking place within this filing, that's very, very quick for this type of filing. And they break it down into several different components with public progress updates every quarter and with different goals to hit with different timelines. Now, they feel this modification is appropriate because before there was no set time frame or deadline for any of these components. So the SEC has now gone in and given deadlines for each part. And it basically requires that the SROs implement this in a timely manner. So, SEC changes to the implementation continued. Paragraph C of the recitals of the CT plan also sets forth the 5 specified actions that must be completed before the operative date. The Commission is concerned that the sequence for completion of the required actions is not expressly clear. from the CT plan. For example, certain actions required prior to the operative date were taken before the selection of the entire operating committee, including non-SRO voting representatives. Those initial decisions would be made by the SROs alone in a manner inconsistent with the Commission's governance order. So with respect to several provisions of the plan discussed below, the commenter expresses concern that the SROs are disclaiming any duty or obligation to the CT plan. The Commission agrees with another commenter that the regulatory obligations of SROs with respect to the CT plan are set by the federal securities laws and regulations, but finds that it is appropriate to reiterate that the provisions of the CT plan do not lessen any of the SRO's regulatory obligations. So the time frame, they're going to break it down into 4 or 5 different components. So within 2 months, the representatives and non-voting representatives must be selected and determined. Within 4 months, the proposed fees must be established to the existing exclusive SIP model. Within 8 months, the operating committee must enter into agreements with the processors performing under the current equity data plans. And then to address this uncertainty, that's why they have done this. They've broken it down into a lot of different components, given specific timeframes. That way everyone's on the same page as far as implementation. Moreover, the Commission is modifying subparagraph IV of renumbered paragraph D to require that the proposed actions relating to the selection and duties of an administrator, discussed in greater detail below, are to be completed within 8 months of the effective date. And then finally, again, like I said, they're going to provide quarterly written progress reports to the Commission and to make these reports publicly available. That's beginning 3 months after the effective date. The timely implementation of a CT plan would undoubtedly facilitate the success of any new market data infrastructure regime, and at the very least, will be important to ensure that upon Commission approval, the implementation of any such regime is not impeded. So, modification to SRO duties. With respect to several provisions, a commenter expresses concern that SROs are disclaiming any duty or obligation to the plan. The Commission agrees with another commenter that the regulatory obligations with respect to the CT plan are set by the securities laws, but finds that it is appropriate to reiterate that the provisions do not lessen the obligations. Other provisions of the recitals. Paragraph A of the recitals establishes that the CT plan is filed with the Commission in response to the Commission's governance order. Paragraphs D and E of the recitals as proposed establish that the current equity data plans will continue to operate until the operative date. Makes sense. Definitions. If you want to pause the video and read this, go right ahead. These are these definitions here of covered persons, member observer, public information. CT fees wasn't listed, weirdly, but go ahead and pause this if you want to read these definitions here. Each super note has a different definition. And then more here. Now, organization of LLC. So there was a bit of a debate about which corporate structure was going to be set up under this plan. Was it going to be an LLC or was it going to be a nonprofit? Basically, after a lot of commenting back and forth, a lot of people requested it would be nonprofit, but the SEC ultimately decided to go with the LLC structure, and it gives a couple of reasons why. But the CT plan states that the purposes of the LLC are to engage in the following activities on behalf of the members. 1. Collection, consolidation, and dissemination of transaction reports, quotation information, and such other information, eligible securities, as the members shall agree as provided therein. 2. Contracting for the distribution of such information. 3. Contracting for and maintaining facilities to support any activities permitted in the LLC agreement and guidelines. 4. Adopted thereunder, including the operation and administration of the system. 5. Providing for those other matters set forth in the LLC agreement and in all guidelines adopted thereunder. 6. Operating the system to comply with applicable laws. And 7. Engaging in any other business or activity that now or thereafter may be necessary, incidental, proper, advisable, or convenient to accomplish any of the foregoing purposes, and that is not prohibited by the Delaware Limited Liability Company Act or applicable law. So the SROs proposed that the following actions require only a majority vote of the members. Number 1, the selection of officers of the LLC. Number 2, certain decisions concerning the operation of the LLC as an LLC and approval of amendments to LLC-related provisions of the CT plan, including provisions related to indemnification, dissolution, and tax-related matters. Now, the SRO asserts that neither of these topics would affect the consolidation and distribution of equity market data, and that therefore the members should have the sole authority to make decisions related to these topics. Now, of course, several commenters said, hold on. It's going to give them exclusive powers thereunder, and states that the LLC structure is flawed altogether and defies America's free enterprise concept. So the commenters really, I mean, I've never seen so many just ravishing comments, ravishing. The commenter further states that under the LLC structure, the members of the LLC will retain control over the actions under the CT plan. And then basically this is where the argument comes in, and Gary or the SEC comes back and is like, no, it's going to be fine. Don't worry. It's because of the obligations that we're requiring, and because that non-SROs are going to have voting rights in electing members and managing the overall CT plan, that's grounds enough for the SEC to believe that the LLC structure will be appropriate. So comments are concerned. The terms of the LLC agreement must be consistent with the regulatory obligations of the SROs as set by the federal securities laws. This is the SEC's argument. And they're saying that the SROs also have direct obligations under the securities laws and regulations to, provide non-SRO voting rights to non-SRO representatives, which means that if you're not an SRO, you can still have a say in the management of the CT plan. Normally, it would be an only SRO or an SRO only type decision, which could have severe conflicts of interest. So basically, the commission is keeping it as an LLC structure because the fact that they must comply with the obligations set by the plan, combined with the fact that non-self-regulatory organizations' voting representatives will have rights on managing the activities of the CT plan, that's good enough for them to keep it an LLC. And they also believe that the structure doesn't matter. So we'll see, Gary. So including non-SROs. So first, they're modifying the commission is modifying the CT plan to limit the circumstances under which the SRO voting representatives may meet outside the presence of the non-SRO voting representatives in executive session. Second, as discussed below, they're modifying the plan to limit the topics that may be addressed in a legal subcommittee without the non-SRO voting representatives present. That's good. Third, they are modifying the CT plan to require that the creation and assignment of any officer position and duties be subject to a vote of the operating committee rather than by a majority vote of the SROs. There you go. Fourth, they are modifying the plan to apply the exculpation provisions available to the SROs to non-SRO voting representatives. And lastly, as discussed below, they're modifying the CT plan to remove the provision that would allow the SROs to modify Article IX, Article X, Article XI, and Article XII that I'll discuss later on. It's like at the very bottom of this filing, so very interesting topics. Basically, these 5 things are going to be doing is going to be the reasoning why the aforementioned decision for them to keep it at LLC. These 5 things, the SEC believes is going to keep everything basically under control. One commenter states that the CT plan does not include all the necessary provisions, but then they didn't provide or identify the areas in which it believes the agreement is deficient. So for that reason, the commission so far is approving all of this. What's going on? My PowerPoint slide. Oh, don't make me have to redo this whole thing. Oh, I know what's going on. The last slide was like 18 videos of that Kenny Griffin face that we saw a second ago. And it probably crashed the PowerPoint. Ha! Oops. That was it, though, basically. So to reiterate, we have, well, the PowerPoint's broken, but to reiterate, so the SEC comes in. The SROs come out with this plan. The SEC doesn't like it, thinks it's going to take too long. So they redo the time frame. They create different components that must be completed by a certain time, quarterly updates provided to the public, They also changed some definitions. They also are changing a few things to where non-SROs can now have a say in managing and voting in board members and making important decisions as far as the CT plan is concerned. So yeah, I mean, so far so good. We'll have to continue. Again, this is only like the first 20 pages, so yippee! Have a good one. Sorry this one was so long. Have a good weekend. Jack, take